My name is Bonaventure. Welcome to our commercial class. Today we are going to look at a topic known as insurance. And as most of you are aware, insurance happens in this way. For example, if you have a car, and you know when you have a car and cars are prone to accidents, if you get involved in an accident and that car, you have no any other money to buy another car, it will be a very sad situation for you because you are used to having a car. So what you can do, the best you can do, is to insure that car. If you insure that car, and in the event that you are involved in an accident, then the insurance company will come up and buy for you another car. Or if it was not completely written off, it can come up and repair that car and bring it to the situation in which it was before the occurrence of the accident. Also, you may have a house, and maybe the area where you stay is prone to fires or people setting up houses. So you can insure that house by an insurance company. In the case of such a happening, then the insurance company will compensate you, and you may build another house, or you may buy another house. So that's the work of insurance. Insurance is key to the development of the house because it's also a form of saving. So that in future, if anything were to happen, then the insurance will have to compensate you. With insurance, you can also insure your own life. That in case I die, my offspring, my children, or my wife should be paid such and such amount to carry on the family business, or to carry on, or to go about with their own life. So insurance is very important. That is the insurance. But this insurance also, before you enter into a relationship with any insurance company, you have to sign an insurance policy with the said insurance company. And in that policy, the name of the insurer must be there. The insurer is the insurance companies. And the insured person is the person being insured. The insurer is the insurance company, and the insured is the person being insured by that insurance company. Also, the subject matter. What are you insuring? What are you insuring about? Is it you want to insure yourself? That is life assurance, or you want to insure your house, or you want to insure your business from burglary, or you want to insure your car against accident. So the subject matter must be stated in that policy. It must be stated in that policy. That is the subject matter, and the risk insured against must also be stated. And the period that insurance will last must also be stated, the insurance policy. Not only that, even the sum the sum insured must also be stated in the insurance policy. And the date of issuing the insurance policy must also be stated so that it's known. And the signature of the insurer must also be there. So that is the insurance. Those are the contents of the insurance policy. And now we come to the principles of insurance. The principles of insurance are as follows: that when you are stating your facts in the insurance policy, you must state the truth and nothing the truth. Whatever you state there must be of utmost good faith. You must disclose everything. If you are insuring, say, your car against the risk against accident, you must not say, if you will ever allow somebody with a license to drive your car. Because once you allow somebody who has not driving, or your son or your daughter who has not driving license, and he or she causes an accident, and then the insurance will not pay you, because that accident, it presupposes that it could not have happened had you given somebody who was not trained as a driver. Therefore, whatever you say, I will not give my car to anybody who has no driving license. I will not give my car to a drunkard, even if he has a driving license, because he might cause an accident. So you must state that in your insurance policy when you are insuring either your car or your other property. You have to state so. So it must be truthful, utmost good faith. Utmost good faith. You must not cheat. You must not lie. You must be truthful. Utmost good faith is needed when entering a contract with an insurance company. Whatever you write there, it will return against you if you lied to the insurance company, because it will not pay. In the event that an accident happens. Also, when you are insuring, you insure in something which you have insurable interest in it. For example, you may insure your wife, because if your wife is killed, you stand to lose as a husband. If your husband is killed, you stand to lose as a wife. Therefore, you insure something which you have an interest. You insure your car because it's a family car. You insure your house because you live in that car. You insure your shop because you earn income from that shop. But you cannot insure in something that you have no insurable interest. For example, you cannot insure the house of a neighbor, that if the house of my neighbor burns, then you should be compensated. No. You see, in that case, it will mean that you want to do business with the insurance company. No. You can't do that. That you will have some benefits, extra benefits. No. You only insure in something that you have insured interest. So the other principle, when something happens to your car that you insured, the insurance company will not pay you more than the value of the car. Or if the car got an accident and it was not completely written off, then they will just repair that car to the extent of the damage that was caused to it. But they will not pay you more than than the damage cost. So the insurance company will indemnify you the loss, but not more than what you have incurred, not more than the loss you have incurred. It will only indemnify you what the damage that you have suffered. Also, for example, if the car has been written off, but what remains is the scrap metal. That scrap metal, they cannot buy you a new car and give you again the scrap car. No. They will sell that one to scrap metals, but they cannot buy a new car and then give you the other one. That's the principle of subrogation. Another principle in insurance, for example, in matters of property like you have a fleet of planes, instead of insuring one insurance company, you can double insure your property, so that if the accident happens, then the two insurance companies will come up and share the cost of that property of yours. That is called double insurance. Also, when you are insuring property, your property, you are insuring, if it's about fire, then it should be caused by fire. The destruction of your property should be caused by fire. But it should not happen that somebody else came with a caterpillar and pulled down your house, and you expect the insurance company to come up and pay you. No, it can't do so, because you insured against fire, but you did not insure against a caterpillar coming from somewhere to pull down your house. No. So what you have insured should happen. What you have insured for should be as close as possible, because you have insured your house against fire. Electricity may cause fire. Somebody may burn your house. You may set your house ablaze. That is nearer the thing insured for. But if it is a caterpillar which has come to pull down your house, then that one will not be honored, because it's not the policy of the insurance company as per what you agreed upon with the said insurance company. Also, the insurance, you may even insure one property. You insure with this other company, insurance company, and also you insure with others also. It is not bad by doing so, but even it makes payment of payment of your car much easier, because the two companies will come and share the cost of that car. So those are the principles, some of the principles that are entailed or are described in an insurance policy. You can look for others if any, because insurance as a profession goes on improving from year to year. So you can also look for other courses or other principles that maybe I have not mentioned, and then that will be a live discussion for another day. Now, types of insurance. We have insurance, we have life assurance. Life insurance is insuring against life. It can be against your own life, of your wife, of your children, of your grandsons. So long as you have insurable interest in them, you can insure. Also, you can insure against fire. You can insure against burglary. Those are the type of insurance that you can insure. So, with that, we come to the end of our lesson, and until next time, bye-bye for now.